Titans! Bitcoin rallied over the weekend, but did we get the weekly candle close we were looking for? And is there a clue in the latest Bitcoin ETF flow table that we are now seeing a shift in what has been one of the largest sources of sell pressure for Bitcoin this cycle? Let's talk about all this and more today. Kevort, hit that intro. Let's kick it off with a very interesting development on the Bitcoin ETF flow table. Ever since the launch of the spot ETFs back on January 10th of this year, we've seen nothing but outflows from Grayscale, mainly due to their 1.5% maintenance fee, which is significantly higher than its competitors. But as of Friday, May 3rd, Grayscale actually saw $63 million worth of net inflows, ending the 78-day streak of outflows. So if this marks a new turning point for seeing inflows instead of outflows moving forward, then that would remove what has been a very strong source of sell pressure for Bitcoin this cycle. And if you also factor in the timing of being past the halving event with less Bitcoin being mined per day, we could really start to see the onset of the parabolic price action we've been expecting to see pretty soon. All right, now let's hit the charts. Looking at Bitcoin on the 4-hour time frame, you can see we had a very nice V-shaped recovery here, and we finally broke through this long-term resistance trend line after retesting it several times since the beginning of April. Here, a few times here, and even here. Notice how we not only broke through it, but we successfully retested it afterwards. But we are now struggling against this area of resistance in red. So getting through 64.7K is the next short-term goal in this time frame. Zooming out to the 12-hour time frame for Bitcoin, you can see we had a breakout to the upside from this enormous falling wedge pattern. And if you guys recall that strong trend line we spoke of on the 4-hour time frame, well, that's right here. So the goal here is to reclaim each of these local tops marked in blue here to make our way back up to 72K. And when you apply the Fibonacci retracement tool, measuring from the top here down to the bottom here, you can see the 0.65, 0.618 Fibonacci golden pocket lines up very well with this local top at around 66.5 to 67K. So a decision will have to be made at that point. But just keep in mind that Bitcoin has a strong tendency to retrace to this golden pocket, so I can see us getting there in the short term, but we may see a rejection due to this combined resistance at the local top along with the Fibonacci golden pocket. But if the buy pressure is strong enough and we are able to see candles closing above it, then that's a good sign that we're on our way back up to the very top here. Looking at the Bitcoin CME futures chart on the daily time frame, you can see that after closing the daily candle on Friday marked by this yellow arrow here, we now have this big gap that was created over the weekend. Now the majority of these gaps do end up getting filled during corrections, so we'll just have to keep it in mind that it's very possible that we'll revisit this 62.6K level to fill this gap at some point. And this could occur as early as today or possibly during the next major correction. Switching over to the 3-day time frame for Bitcoin, we're still waiting for the Bollinger Bands to expand in this region here. And when this happens, we'll also see the Bollinger Band with indicator blue line rise like it did back here and back here too. Now also note that the last two Bollinger Band squeezes we got here on this time frame did lead to a continuation of the uptrend. So maybe the same logic will play out over here too, but of course we'll just have to wait and see. Zooming out to the weekly time frame for Bitcoin, we touched base on this thoroughly last Friday, so I won't go into too much detail again today, but just to quickly recap, all major corrections so far in this cycle have fallen approximately within a 20 to 24% range. So this range appears to be the standard for our major corrections in this cycle. Just something to keep in the back of your mind for the next time we have another major correction. And finally, zooming out to the weekly time frame once again for Bitcoin, the goal was to close last week's weekly candle marked by this blue arrow here above 60K, which we did do, and that puts us back into this consolidation rectangle. And as you can see, it closed with a hammer candle, which has a long wick on the bottom, and is typically a reversal signal you see at the bottom of a downward trend for reversing to an uptrend. Now looking back at the previous consolidation periods in the cycle, you can see hammer candles that were also formed over here and here too. And look what happened afterwards. We got a continuation of the uptrend. So there's a good chance that we could be seeing the uptrend continue soon if this hammer candle follows suit with what we saw back here and back here. Aside from that, we also noted last week that we had higher lows in the price action here and here. And at the same time, we were seeing lower lows on the RSI or relative strength index. But since Bitcoin went into rally mode over the weekend, the RSI leveled out afterwards. So we didn't quite get the confirmation for the hidden bullish divergence. But the stochastic RSI is very low now, meaning that we are in oversold territory for Bitcoin. And as long as we continue to stay above 60K, we should begin to see the blue line cross over the orange line pretty soon. And that would also correspond with seeing the next leg up on the price action.
Titans, we are your one-stop source for guiding you through this Bitcoin bull run. Please join us as we continue to provide the latest market and technical analysis that are going to give you that edge.